Welcome to Accounting Made Easy series by Waithera Mwangi. We are now tackling the accounting for assets. And to begin with, we have property, plant, and equipment, that is PPE. We want to define the term property, plant, and equipment, that is PPE, and we are saying these are tangible items that are held by a firm for production or supply of goods or services, administration units, or leasing out, and are expected to be used for more than one financial period. Recognition. So you're saying property, plant, and equipment are recognized once the framework recognition criteria are met. That is, probable, probable that the future economic benefits attributable to the assets will flow to the firm, and the cost of the assets can be reliably measured. Measurement at recognition. We are saying all items of PPE, that is property, plant, and equipment, are recognized as cost. These costs include the following, and we are saying we have the cost price, that is the purchase price including import duties and non-refundable purchase taxes after deducting trade discounts and rebates. Then we have directly attributable costs. These are costs of bringing the asset to location and condition necessary for it to be capable of operating in a manner intended by the management. That is, everything up to the point that it can operate. These are costs of site preparation, employee wages, pensions. We have installation and assembly costs, initial delivery and handling costs, cost of testing the asset to confirm that it can operate, and we have professional fees. Then number 3, we have estimated cost of dismantling and removing the asset. This is to enable restoration of the site on which the asset is located due to an obligation incurred under International Accounting Standards 36 when the asset is acquired or through use other than to produce inventories, e.g., to dismantle and remove the assets after 15 years. That is the obligation. So we are saying this cost can be capitalized. The future provision has to be discounted to the present value. Then we have number 4, financial cost. We are saying the capitalization of finance cost is required for qualifying assets. That is, those which necessarily takes a substantial period of time to be ready for their intended use or sale under International Accounting Standards 23, that is borrowing costs. Then we have subsequent costs on PPEs are capitalized when the cost of replacement is incurred, provided the recognition criteria is met. We have an example which I gave you in a previous video. It was in form of a question, and we are saying calculate the amount that should be capitalized based on the following information. We have the purchase plant, which is $550,000. Half is $1,000. We have it has the cost of flight, professional fees, testing the plant, import duty, so discount, the installation of plant, that is wages of all staff, staff training on new plant, installation of plant, and that is technical fees. So we are saying the cost of the plant is inclusive of 4% VAT that is recoverable. So you first of all look at what taking care, taking into account what we have already learned. We are saying that trade discount, when you are calculating the amount to be capitalized, trade discounts should be removed from the cost of the plant. Then we have VAT that is recoverable. If it is recoverable, then it should not be capitalized because the purchaser will recover that VAT. Then we have something else that we have in this question, staff training on new plant. We have said that Though the costs that should be capitalized are those costs that are to make this asset to be able to operate. So when we say staff training or new plant, it means these staff are being trained to take after to work after the installation and the testing is done. So they are going to benefit. It is after the plant. So the answer or the solution that I have prepared for you, we have purchase of plant 550,000. You raise 16% VAT, which is recoverable. That is 16% of 550,000 is 88,000. And you raise the trade discount, that is 15,000. Then you add the flight cost, the professional fees, the testing of plant you added, import duty you add, the installation of plant wages, that is own staff wages. Then you have installation of plant, all those costs you add them, and then the amount to be capitalized after deducting the trade discount and deducting the VAT is equal to $641,000. Thank you very much for being part of this channel. Thank you very much for sharing sharing videos with your colleagues and your friends, and thank you for subscribing. I urge you to subscribe to keep this channel and to keep us going, and we thank you so much for being part of us. Thank you very much. Let's meet in the next video.